Welcome to the Accendo Traders Group. This is our weekend wrap-up report for May 18, 2008. AccendoTraders.com, effective trade plans delivered daily. And as we go through our routine each night, we change it on the weekends to prepare ourselves for the week. We want to make sure that we're looking at the sectors to see which ones are trending up or down. We also want to read some blogs and make sure we're seeing what some of the experts are saying about the market, get some market commentary. And as always, we want to make sure that we have time to spend with our family. So last week in the market, we ended up, and what's important about that is that you could say that the market sentiment has changed. We did have some negative news. I mean, oil prices are continuing to rise. Industrial production went down. There were some concerns about the bond insurers with Moody. Bernanke said that the financial market conditions are far from normal. But despite all of that, we ended up. So you can say that we're kind of shifting to some of the positive news, like retail, like the housing data, to hold the market up versus the negative news sitting the market down. So we're half full versus half empty right now. Obviously, we know that changes from day to day. But right now, we're half full. And again, what's important is that the market is continuing to pull back at the 200. This is a huge psychological barrier. That's why 1400 was for the S&P 500. If we can get the markets as a whole to clear the 200, we certainly have a great bullish sentiment once that happens. Once again, we're going to be light on economic data this week. And as you already know, earnings have kind of slowed down. We're not in the full swing of things there. Tomorrow we have leading indicators. We have Lowe's before market open, dry shipping after market close. The thing about Lowe's tomorrow and then Home Depot on Tuesday before market open is that they may have something to say about the consumer and the discretionary spending, rebate checks, all those things there. So they may have something worth looking at, and more importantly, that the traders left was split on Friday. We'll check these as we go forward with our trade plan for the week. Let's go ahead and take a look at the sectors. So you can see here we got hotels, and they're still within their consolidation rectangle. We can move on to materials. And we did get the bounce. We were looking for a break of 520. We got that this week, so definitely materials still going forward. Utilities, they look okay. Looks like they're potentially trying to break out of this. I'm going to put them in the middle. Builders, I actually like builders, and certainly we had good housing data, but I'm going to hold off until we break this resistance that we're forming right here. Casinos, still showing some weakness. We talked about the fact that they retraced last week and basically come right on back down. I'm not sure if this is good data here, but they're back below this resistance level. So I'm still going to keep casinos in our bearish category. Coal, still liking coal. Kind of switching to BTU, but we'll see. Peabody, symbol BTU. But liking coal if they can break higher. Banks aren't really doing anything. Pharmaceuticals, biotech's not really doing anything. Talk more about the NASDAQ and the Dow later. Pharmaceuticals, we were talking about would they break, and actually they retreated back to the 50, but we know that the 50's sort of been a hard resistance here, so we'll have to watch it, see if we get a fall back down. Internet, this is one of the main reasons you got to think about why the NASDAQ is now leading the market. Look at the internet sector right there. So that certainly is bullish. We've got gold. Last week we were talking about will it break the 50, and we retraced it, and we did break through the 50. So liking gold now. Software, another reason why the NASDAQ is leading the market. Very nice here. Insurance and oil services, very nice. Very nice indeed. Retail just doesn't want to break out. As much as I want to put it in the middle because of the rebate checks, but it's just not really showing it. And this was the week where we had a lot of retail stocks reporting earnings. We had the retail data. So I'm not sure if we're going to have another catalyst. So that's probably why we had a good week. But now that that news is out, we're probably going to fall back. Don't know. Stocks, another reason why the NASDAQ is leading. Look at the stocks. Look at the semiconductors. Excellent. Transport, and I gotta be honest with the transport. With oil being so high, I've just been waiting for it to fall down, and it hasn't. It's bucking the trend. It's like, who cares about oil? So we may have to look more seriously at BNI, UNP, FedEx, especially BNI that I've passed on because of oil prices, but its transports are just doing good. So got to put transports on the bullish side. Brokers, this is what we need to see the S&P 500. Brokers are the biggest percentage of the S&P 500, and we need to see the brokers start to take off here to start showing leadership. Natural gas, look at that, excellent. And finally, oil again. So for the sectors, we have on the bullish side, basic materials, coal, internet, gold, software, oil services, semiconductors, transports, natural gas, and oil. On the bear side, we have casinos. And right in the middle, we've got utilities. Okay, now we're ready to begin the education portion of our video. And we've been using the book Trading in the Zone by Mark Douglas, the shift and mental analysis. And this is the end of the first chapters. So those who have been for us a while can kind of exhale and say, okay, enough of the mental side of trading. And although we'll be talking more about it, but this first chapter has been about accepting the risk and understanding that there's two trains of thought and that they are battling each other to protect ourselves and to be in an environment where harm can happen. Those two things are kind of colliding against each other, and we have to develop a successful mindset to interact with the market while still accepting the fact that we may or may not win as traders. And yesterday, or on Thursday night, we were talking about this trader's mindset, and that's what successful traders are able to do. They're able to remain confident in the face of uncertainty. They're able to say, this is my system. I know that the market's doing this, but I'm going to trust my system and let it work for me. And at the same time, we have to recognize that what's the solution to becoming this consistent trader? And trade plans are one of the things. But again, a part of your trade plan is addressing how you mentally interact with the market and learning how to adjust your attitude and beliefs about the market, while at the same time keeping in place the fact that now that I'm consistent, or now that I think correctly about the market, that you don't suddenly trade reckless. Again, having a trade plan prevents that. But that's what we're now have to balance. We have to, now that we're accepting the risk of trading, we now have to have a system in place, our trade plan in place, so that we can trade based off signals, trade based off of what we believe are successful trades, and not just trading because, well, I know that I feel comfortable in the market and I'm just going to start clicking to my heart's desire. So the successful trader that you want to become is in the future, is a future projection of yourself that you have to grow into. So that implies that we have to continue to expand our thoughts, continue to learn new things, and create new ways of expressing ourselves. So that is it for the first chapter of the book. Again, we have risk. We need to learn to accept that risk, and we need to have systems in place to identify successful entries and outs. And that is our trade plan. As usual, to get the full version, especially on the weekend, you want to get the full version because we've got the new segment, market commentary. We've got the flag stocks and the new stocks. So certainly want to consider getting the new getting the podcast version. As always, thank you for your feedback, and continue to go check out the blog. I've got all the trade plan stuff up there, and there's more stuff coming. And as always, traders on risk. I will see you guys tomorrow.